The world thinks silver's rally is over. Wall Street says it's just a bubble that popped. They are wrong. While markets were distracted, deep in South Korea, Samsung quietly ignited a revolution, a silent detonation that could reshape the global energy landscape. Their new solid-state batteries promise instant charging, 900-mile range, and safety impossible for traditional lithium-ion cells. But the real secret isn't lithium, it's silver, a tiny element transformed into a strategic powerhouse, embedded in every battery at levels the market has never seen. This isn't theory, it's published science, a silver-carbon nanocomposite that stops dendrites in their tracks, letting EVs charge faster, go further, and stay safe. Yet, the implications are terrifying. Every car built with this tech devours silver by the kilogram, threatening a supply that's already stretched thin. Traditional pricing models crumble. Banks play paper games, Samsung plays physics. Physics always wins. Friday's dip to $62 was a mirage, a fleeting illusion before reality hits. If you thought silver was a commodity you could casually trade, think again. The hunt has begun. Governments, auto giants, and tech titans are already positioning. This is not just a battery story, it's a structural shift in the global metal economy. And if you blink, you'll miss the explosion that's about to reshape markets forever. Imagine a Friday afternoon. Wall Street is celebrating or panicking. The silver price plunges to $61.50. Headlines scream, "Silver rally over, bubble pops." But in a quiet lab in Suwon, South Korea, something monumental is happening. Something the market cannot see. Something the banks are powerless to stop. Samsung SDI, a titan in battery manufacturing, has quietly confirmed specs for its new solid-state production line. The world hears about 900-mile ranges and 9-minute charging. But the true story? Hidden in plain sight. The secret isn't lithium, cobalt, or nickel, it's silver. Not a trace, not a gimmick, grams, tens of grams. A structural systemic use of silver that could redefine the global energy economy. Here's the physics. Lithium-ion batteries, the backbone of phones, laptops, and EVs for 30 years, have a fatal flaw: dendrites. Tiny, jagged crystal needles that grow inside the battery during fast charging. They pierce the separator between anode and cathode. Boom. Short circuit. Thermal runaway. Fire. EVs must charge slowly. Range drops in winter. Accidents happen. Scientists have been chasing a solution for decades. Toyota, Volkswagen, GM, all promised solid-state breakthroughs. All failed. The problem was the anode. Graphite expanded too little. Silicon expanded too much. Pure lithium was too unstable. Then Samsung found a solution. A silver-carbon nanocomposite layer. Published science, peer-reviewed journals, not theory. The silver acts as a host. Lithium ions flow freely. Dendrites cannot form. Stable, conductive, perfect. The battery becomes smaller, lighter, faster, safer, instant charging, double the range, fireproof. But here's the kicker. To work at scale, this battery needs grams of silver per cell. A luxury EV pack could require up to 1 kilogram. Even conservative estimates, 50 grams per vehicle. Multiply that by 36 million EVs projected to adopt the tech by 2028, and suddenly we are talking 11.5 million ounces. That's just the start. Global mining produces 830 million ounces per year. Industrial demand already consumes 600 million. Solar panels, electronics, jewelry, and coinage eat the rest. The silver carbon anode? It's a structural shock. A demand explosion that Wall Street refuses to price in. The banks smash the paper price. Algorithms dump contracts. They think they control the game, but physics does not negotiate. Chemistry does not yield to hedge funds. And while the world sees a $61 drop, Samsung's procurement officers are quietly locking in long-term contracts. Because if the metal isn't secured, the billion-dollar factories are worthless. The countdown has begun. The silver bomb is ticking. Supply is tight. Adoption is accelerating. And when mass production hits, the shockwave will ripple through every market, industrial investment, even government policy. Ask yourself, when this wave hits, will you be watching from the sidelines? Or will you understand the invisible hand of physics shaping the future? Next, we calculate the extinction math. How fast will the world's silver reserves vanish under this scenario? Brace yourself, because the numbers are terrifying.
The banks smash the paper price. Algorithms dump contracts. They think they control the game. But physics does not negotiate. Chemistry does not yield to hedge funds. And while the world sees a $61 drop, Samsung's procurement officers are quietly locking in long-term contracts. Because if the metal isn't secured, the billion-dollar factories are worthless. The countdown has begun. The silver bomb is ticking. Supply is tight. Adoption is accelerating. And when mass production hits, the shockwave will ripple through every market: industrial, investment, even government policy. Ask yourself, when this wave hits, will you be watching from the sidelines? Will you understand the invisible hand of physics shaping the future? Next, we calculate the extinction math. How fast will the world's silver reserves vanish under this scenario? Brace yourself, because the numbers are terrifying. The numbers don't lie, and they're terrifying. Global silver mining produces roughly 830 million ounces every year. Recycling adds another 180 million. That's a total supply of just over 1 billion ounces. Industrial demand electronics, solar panels, medical devices consumes around 600 million ounces annually. Jewelry and silverware eat 200 million. Investment demand coins, bars, ETF, FES claims another 250 million. The result? A structural deficit. Every year, the world burns through 50 to 100 million ounces just to keep the lights on. Now, introduce the silver-carbon solid-state battery. Even with conservative estimates 50 grams per EV adoption by just 20% of new EVs by 2028 adds 11.5 million ounces of additional demand. But the story gets worse. Scale up to half the EV market using 200 grams per car. Multiply by 18 million vehicles. Suddenly, we're looking at 115 million ounces, more than Peru produces in a year, more than the solar industry consumes. And this is just automotive demand. The math is ruthless. Supply is finite. Mines cannot expand overnight. It takes 10 to 15 years to bring a new silver mine online, or grades have collapsed. A good mine in 2005 produced 15 ounces per ton. Today, 4 ounces per ton is considered excellent. 4 times more rock, 4 times more diesel, water, labor, and labor strikes, political instability. And sanctions in top-producing nations like Mexico, Peru, and Russia make mining even riskier. Recycling, don't count on it. Unlike gold, which is recycled at 90%, silver lags behind at less than 20%. Why? It's dispersed. Tiny traces are embedded in electronics, solar panels, and industrial components. The cost to extract it exceeds the metal's value. We are literally burying billions of ounces back into the earth, and the silver in solid-state batteries. Locked for 15 years, the next generation won't touch it. So what happens when demand hits this geological wall? Prices must rise. There is no buffer, no elasticity. The deficit is structural. Consumption is relentless. And governments, which have mandated the EV transition, face a paradox. The tech is ready, but the metal is not. Silver spikes to $200 per ounce, EV costs skyrocket. Subsidies, strategic stockpiles, even industrial prioritization, these become inevitable, and the clock is ticking. Samsung and other battery manufacturers are already securing supply. EV factories under construction cannot wait. Every month that passes without sufficient silver locks in the scarcity. Imagine the scenario. The market sees silver at $61, and retail investors panic. But behind the scenes, the real story unfolds. Asia is already paying $66 to $67 for physical silver. Arbitrage trades will explode. Western shorts are trapped. The structural shortage is about to collide with the market. The question is no longer if this shortage matters, nor how quickly it will hit. The extinction equation is real. The deficit is not theoretical. Physics and chemistry dictate the outcome. And the most terrifying part, the world isn't prepared. Next, we'll explore exactly how the EV paradox forces governments and companies to compete for silver, and why, when the first mass-market solid-state EVs hit the roads, ordinary investors might not even be able to buy a single ounce. The transition to electric vehicles is accelerating. Governments worldwide have mandated it. California, The EU, China have set timelines to phase out internal combustion engines. Subsidies are flooding battery factories. Tax incentives are contingent on sourcing critical materials from friendly jurisdictions. But there's a problem, a paradox. The technology is ready. Solid-state batteries are coming. Silver carbon anodes, the secret ingredient, will allow EVs to charge in minutes, run 900 miles, and never catch fire. But the metal to make them is finite. Let's do the math. A luxury EV with a long-range pack could consume 500 grams of silver. That's 16 ounces. Multiply by 18 million vehicles if adoption hits 50% of the market. That's 115 million ounces. The annual production of mines globally. Every ounce gone and recycling. Forget it, that silver is locked in batteries for 15 years. You won't see it again. The old wheel recycle argument fails spectacularly. By the time the batteries reach end of life, the market has moved decades ahead. The paradox deepens. Governments want EV adoption. They mandate production. They subsidize factories. But if silver prices spike to $200 per ounce, suddenly the EVs become unaffordable for consumers. Demand stalls. Net zero targets falter. Political pressure mounts. So what will governments do? History gives us a clue. Strategic materials become controlled commodities. The Defense Production Act in the US, the European Raw Materials Initiative, they exist precisely for this. If Tesla or Samsung can't source enough silver, governments step in. They may prioritize industrial allocation. They may restrict public sales. Silver eagles, retail bullion. For the sake of the EV revolution, national security trumps free markets. Meanwhile, companies like Samsung, Toyota, and Volkswagen are not waiting. Procurement officers are securing contracts, stockpiling supply. Factories are under construction designed specifically for silver carbon anodes. They cannot switch to another material overnight. Chemistry is stubborn. You reduce silver, dendrites return, cars catch fire. Safety cannot be compromised. And here's where the tension skyrockets. The global supply chain is already tight. Mexico produces 25% of silver. Peru, Russia, China, each with political risks and labor unrest. Supply cannot expand fast enough. Demand is structural. The deficit is baked in. Now imagine the first mass-market solid-state EV rolls off the line. The world suddenly realizes each vehicle contains dozens of ounces of silver. Panic buying will begin not on Reddit, but in boardrooms. Automotive giants will compete fiercely for every gram. The price of silver will no longer be set by paper trading or retail demand. It will be dictated by physics, by chemistry, by necessity. And the countdown has already begun. Every week that passes without additional supply pushes the system closer to crisis. By 2026, the first wave of solid-state EVs will hit the roads. Investors and governments alike will be forced to confront a stark reality. Silver is no longer a commodity. It is a strategic lifeline. This is the EV paradox. The faster the transition, the fiercer the scramble and the outcome. A market where ordinary buyers may never get another ounce without paying a steep premium. Next, we'll break down exactly how the Samsung silver bid will reshape the entire supply chain and why the banks. Paper games are powerless against the laws of physics. The world is facing a silver crisis, not next year, not in a decade. Right now, solid-state EVs are coming. Each battery demands tens, sometimes hundreds of grams of silver. But the mines, they can't keep up. Global silver production sits around 830 million ounces per year. Recycling adds maybe 180 million ounces. That's it. A fraction of what a full EV transition requires. And mining is not like printing money. You can't snap your fingers and double output. It takes 10 to 15 years to develop a new mine from discovery to production. Even if a giant deposit is found today, it won't deliver ounces until 2035. By then, the battery revolution is long underway, or grades are collapsing. In 2005, a good mine yielded 15 ounces per ton of rock. Today, around 4 ounces per ton, you must dig 4 times more rock. That means more diesel, more water, more labor. Costs rise exponentially. Productivity falls. Political risk adds pressure. Mexico produces 25% of global silver, but strikes and permit freezes have slowed extraction. Peru faces constant protests. Russia is under sanctions. Supply is not just finite, it's fragile. Now imagine the Samsung scenario. EV production surges. Silver demand jumps 100 million ounces annually. The mines are already maxed out. Any sudden spike will shock the system. There is no safety buffer. The paradox is brutal. Governments push for EV adoption. Companies scale factories, but the material to build them is physically constrained. Prices will spike. Consumers may balk. Subsidies may be needed. Governments may seize control. Silver is transforming from a commodity to a critical strategic material. Scientists confirm the limits. Dr. Alina Petrov, a mineral economist at the University of Munich, says, "We are reaching the geological wall." Silver cannot be expanded rapidly without enormous environmental and logistical costs. Every year of delay in expanding mining capacity multiplies the risk. Every new EV factory increases the strain. Supply cannot flex fast enough. Chemistry and physics now dictate economics. The countdown is real. By 2026, the first wave of mass-produced solid-state EVs hits the road. Mines cannot accelerate production. Existing reserves will be consumed. Prices could skyrocket. Ordinary buyers, investors, and even governments may face rationing. And here's the chilling truth. The bank's paper games are powerless here. Futures contracts and paper silver cannot create atoms. Physics wins. Always. The clock is ticking. Every day of inaction makes the coming squeeze more severe. The geological wall is not theory. It is reality. And it is closing in fast. Next, we'll explore how this silver bottleneck interacts with the auto industry's unyielding demand, revealing a collision course that could redefine the market forever. Everyone thinks silver can be recycled. That old phones, laptops, and batteries will feed the new EV revolution. It's a comforting story, but it's wrong. Dangerous, deadly wrong. Silver is everywhere, but it is tiny, dispersed, and microscopic. A smartphone has about 0.1 grams. A laptop maybe 0.5 grams. Solar panels, missiles, electronic silver is sprinkled like stardust. Collect it? Too costly. Too energy intensive. Most ends up in landfills. It's gone forever. Contrast this with gold. Nearly 90% of gold is recycled. Why? Because it is concentrated. Coins, bars, jewelry see to recover. Silver is the vampire dust of industry. It hides in billions of devices impossible to collect at scale. Even if every old EV battery could be harvested immediately, the math is brutal. Solid-state EVs are just starting to hit production lines. The silver inside a battery isn't available for 15 years until the battery reaches end of life. The metal is locked, sequestered, gone from circulation. Dr. Michael Zhang, a materials scientist at Tsinghua University, warns, recycling will not solve the immediate supply shortage. The silver is trapped in products with lifespans far longer than the pace of current demand growth. Let's do the numbers. Suppose 50 grams of silver per car. The first million solid-state EVs produced today would lock 50 metric tons of silver for a decade and a half. Multiply that by the tens of millions of EVs projected suddenly. Recycling is a drop in the ocean. And it's not just EVs. Solar panels are expanding rapidly. Electronics continue to proliferate. Industrial demand is relentless. Every ounce of silver that could have gone into recycling is already claimed by existing technology. The consequences are staggering. The public believes silver can be sourced from old devices. Investors believe that recycled supply will cushion price spikes. They are blind to reality. There is no surge of silver waiting in the wings. The shortage is structural, immediate, and inelastic. Even if miners ramp up slowly, even if governments release reserves, the recycling myth lulls everyone into false security. By the time it could make a difference, the market will already have priced in scarcity. Physical silver will be snapped up first. Retail buyers? Too late. The clock is ticking. EVs roll off production lines. Each battery consumes tens of grams of silver. The mines are maxed. Recycling cannot fill the gap. Prices are being artificially suppressed by paper trading, but the fundamentals scream for a correction. The stage is set. Structural deficit, locked metal, relentless demand. The silver revolution is coming, and when it hits, it will hit hard. The world wants electric vehicles. Governments have decreed it. Internal combustion engines are on the way out. Sounds good, until you look at the periodic table. Solid-state batteries need silver. Lots of it. Not a sprinkle. Not a trace. Hundreds of grams per vehicle in high-performance packs, and demand is about to explode. Here's the paradox. Governments want EV adoption to accelerate, but physics doesn't negotiate. Silver is finite. Mines are constrained. Recycling won't save us. The more EVs roll out, the faster the supply crunch hits. Dr. Laura Fernandez, a mineral economist at MIT, explains. Policy-driven EV acceleration collides with physical scarcity. You can mandate cars, but you cannot mandate atoms. Let's run the numbers. Suppose 50% of EV production switches to solid-state batteries by 2028. That's roughly 100 million cars globally, at a conservative 100 grams of silver per vehicle. We are talking 10,000 metric tons of silver, more than one-third of annual global mine supply. And that's just the EVs. Add solar, electronics, industrial demand, and suddenly the deficit is structural. Now consider politics. Countries want EVs. They want clean energy. They also want domestic control. Silver becomes a strategic material. Governments will prioritize industry over investment. Coins, bullion, private holdings, they might be redirected to factories. What you thought was your insurance could suddenly be nationalized. The EV paradox deepens. As silver prices rise, battery costs surge. Suddenly, the car that was supposed to be affordable for the public becomes a luxury. Subsidies may attempt to mask the cost, but the fundamental physics cannot be ignored. Too little silver, too many cars, too much demand, and the shorts. The banks, they can manipulate paper prices all they want, but they cannot conjure metal from thin air. Silver is not just a commodity. It is the foundation of a technological revolution. Every ounce counts. Every delay matters. The clock is ticking. By 2026, Samsung's pilot lines scale up. By 2028, mass production hits. Friday's $61 silver. A fleeting illusion. The silver bomb has been dropped. The math is clear. The shortage is structural. And the factories are running right now. You've seen the numbers. You've felt the stakes. This isn't a rumor. It's physics. It's chemistry. It's the future. So what do? Knowledge without action is wasted. The question isn't if the silver storm hits its win. Stay informed. Watch the market, not the headlines. Track physical silver, not just paper contracts. Follow the miners that matter. Understand the technology that drives demand. And most importantly, share this knowledge. Your friends, your family, your network, they need to know what's coming. Because the moment the world catches up, prices will react instantly. The countdown is ticking. This isn't a drill. The Samsung Silver Revolution is here, and the shockwave is only starting. Click subscribe. Hit the bell, stay on the edge, and get ready, because the story of silver has only just begun.